Alright, welcome to the channel. My name is Mitchell and I'm one half of the Lazy Intellectuals project with my lifelong friend Emmanuel. If you're interested in personal finance, business, economics, anything like that, go ahead and hit subscribe down below so that you can be notified when I drop more content in the future. So this week the government released its CPI data for the month of April. Now for those of you who don't know, CPI data simply stands for Consumer Price Index. Basically, it's a measurement of various consumer products and how the price changes over time. It's not a perfect measurement, but it's what the government uses to roughly get a gauge for inflation. And it looks at the prices on different stuff from like food to medical supplies, gasoline, oil, etc. Now, without spending too much time getting into specifics, there was one big change that happened in April that's worth talking about. The data for April showed the biggest month-over-month inflation increase that we've seen since July of 2008. This past April alone, the cost of goods shot up almost 1% in just a single month. Now this is usually the point where people stop and think to themselves, well, there's no way that this could be as bad as 2008, right? Well, in a recent survey done just this May, it would show that a lot of people actually agree with you. When asked what they thought the inflation on prices would be year over year from April 2020 to April of 2021, the people in this survey said probably about 3.6%. Now, that was probably a logical bet to go with because even in 2008, year over year, 2008 only saw an inflation to prices of 3.7%. What the CPI data for this month shows though is actually much worse. Year over year from April 2020 to April 2021, the current CPI data is showing that we're actually at 4.2%, which again is higher than the 3.7% that we hit in 2008. Now, as bad as that sounds, things do get even worse, but bear with me for a second. Let's actually kind of look at why inflation is happening in the first place. Now, before I say what I'm gonna say, put your political biases aside for a second. Whether you're left or right, just put that aside for a minute and understand that men lie, women lie, but facts don't lie. Between both Biden and Trump, the US government printed a record $11 trillion in just 13 months of time. Now, obviously this was done for stimulus reasons, to help revitalize the economy, to give people their stimulus checks, all of that. It happened on both sides. But depending on whose number you look at, that means that roughly 35% of US dollars were printed in about a year's time. And on top of printing all that money out of thin air, 2020 and 2021 have led to the destruction of a lot of supply chains across the United States. And most recently, we've seen massive disruptions to the oil supply chain. To give you an idea of the magnitude of the issue, since March alone, we've seen 3 major oil supply routes get shut down. One of the first things that Biden's administration did when they came into power was to cancel and discontinue the Keystone Pipeline. Obviously, that's a left-right issue. It's been a big point of contention between the parties. Whether you believe it is right or it's wrong, that is an avenue of oil that we had shut down right off the bat. And shortly after that, we had that major blockage at the Suez Canal. There was the ship that got turned sideways. It stopped a lot of transport. Ultimately, that did stop some of the flow of oil into the United States, thus hurting the supply chain even more. But most recently, we had a major cyber attack on our Colonial Pipeline, which is a major oil transporter throughout the United States. Ultimately, it was a ransomware attack. And as I'm recording this today, I just found out that ultimately they paid the hackers in Eastern Europe $5 million. But again, huge blockage. So just to give you an idea of how messed up our supply chains truly are, the CPI data for April is showing that gas prices are up 50% since last year. And on top of all of this, the United States is starting to see widespread worker shortages. Shortages of workers is also only just helping to raise the cost of goods. On a recent live stream, Meet Kevin actually sums this up pretty well.
We've got supply shortages, Biden's printing money, Fed's printing money, people can't find workers because they're stuck at home. Literally everything that you need. Like if you were gonna bake an inflation cake, these are the ingredients you would use. Fed printing more, President and Congress printing more, supply chain disruptions that are leading input costs to go up.
But like I said earlier, the situation might even be worse than this. CPI data, as much as we want to use it as a metric and as much as we want to trust it, is overseen and distributed by the same government that has every incentive and reason to lie to us about the data. And what I mean by that is if the government can figure out ways to minimize our perception of harm, our perception of the problem being real, then ultimately it affects money velocity in the way that people spend money and in turn inflation. So in other words, the government is incentivized to sugarcoat the situation, find ways to manipulate data, and ultimately reduce fear in the market. And we actually do have reason to believe that the government manipulates or changes the way that we look at data. It's the same kind of thing that they do for the unemployment rate. They used to gauge it one way, but now they kind of changed how we gauge it, and they gauge it another way that's more favorable to them. And here's an interview that Meet Kevin did on YouTube that kind of explains this.
They downplay all these things because every word, everything they say might manifest itself as reality. Okay. And inflation is a really great example. You want to talk about inflation. Most of inflation is caused by inflation expectations. So they have to manage inflation expectations, and they do that very well, including with the CPI. Anybody that believes that the CPI represents true inflation in America today is badly mistaken. The CPI is also managed in a way where you have this hedonic pricing and hedonic substitution, which downplays the rising prices in certain items. So if the price goes up on your computer, they will also take into account the quality, the increasing quality through advanced technology that you're getting to lower that price, to take out that price increase, because you're getting more for your money. They also do what's called hedonic substitution. So a perfect example of that is beef prices go up, well, they'll substitute chicken because it's a lower price, or hamburger.
Now, with all of that said, it's still important to be aware of the fact that even if the government can somehow minimize the issue that they've created, a lot of the damage has already been done. And I'll let Peter Schiff explain this one.
Prices are rising so rapidly now that, maybe the pace of the increase slows down, but I don't expect the gains to be reversed. So whatever price increases we're experiencing now, even if for a while future increases are slower, they're going to be an increase on a higher price.
What Peter Schiff is saying here is that even if we can get inflation rates back to a more normal level, we've already had this big inflation that's taken us up a notch. So even if we're not moving upwards as fast, we've already still made a big jump upward that wasn't there a year ago. It's kind of like the damage has already been done, and all we can do is kind of slow the bleeding. Now, I know all of this sounds super scary, super terrifying. It sounds like I'm trying to fear bait you. I'm really not. Let's actually talk about things we can do to try and mitigate this situation and protect ourselves. Now, I'm no financial advisor, so take everything I say with a grain of salt. I can only tell you what I'm doing personally. Now, for me personally, I only have about 20% of my money in actual cash. 80% of my money is invested. Now, personally, I like stocks as an investment. It's something that I kind of understand and I can diversify pretty easily, whether you've got a lot of money or a small amount of money. But I've got friends that are also getting into real estate, Pokemon cards as commodities, a bunch of different things. Ultimately, there's a bunch of different ways to invest your money. It's just up to you to pick which way you want to do and find something that you understand and can learn about. But something that you should be aware of is that a lot of assets are debatably overpriced right now. We've seen kind of an asset bubble occur over the last year, which is partially due to the inflation fears that we talked about. Basically, if my dollar is losing value every day, why wouldn't I go and put my money in something that could at least retain that value? And that's where gold comes in as well as a really good potential investment to just store value, keep value about the same. And I know a lot of people look at it like, yo, I really don't know investing. Stocks is scary to me. I don't have enough for real estate. Like, how am I supposed to get invested? I don't understand it. But I guess what I would say to you is that the dollar is being mismanaged. Whether you understand it or not, you're gonna lose several percent every year is what it's looking like off your dollar. You might as well go and put that into something safe. There's things that have historically held value, again, like gold, silver. And as always, there's no guarantee that that investment or any other will go up. There's no guarantee that inflation will continue to get worse, but it's my job to report to you what I'm seeing. And what I'm seeing is that it's looking like it's gonna get worse before it gets better. So with that said, thank you guys so much for watching. Hopefully this gave you some good info that you can take. Hopefully beat inflation, avoid it, figure out kind of what you can do different. Be careful out there, guys. Now is the time to definitely be a little bit more frugal. It's a scary time, man, but it is what it is. We're here, and I love you guys. Thank you for watching. God bless, and have a good one, man.